everybody. Welcome back to another exciting episode of the Breaking Bitcoin Market Update. Of course, I'm your host, Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. Hopefully you guys are having a fantastic afternoon, evening, morning, wherever you happen to be across this great world. It's a beautiful day. Today is July 26, 2022, Valley Year of our Lord. Interesting day in the crypto markets. We'll get over to CoinGecko here in a little bit. Overall, a down day, but I think a day ripe with opportunities. There's a lot to talk about in the charts. Not a whole lot of fundamental news, in my opinion. I don't have any big news stories to talk about. Again, we're going to go for about 45 minutes to an hour here. We're going to cover the relevant charts. We're going to talk about where I think price is relatively going. We're going to talk about risk management and trade potentials, strategies that you guys can employ to improve your success or decrease your success, I suppose, depending on how you execute them. You know, again, disclaimer. And we'll talk about the positions that I currently have and where I see things going over the next few weeks and months. Also the next 30 minutes. So we'll break into that. If you guys have any questions, as always, or potential chart requests, make sure to drop them in the chat. We are going to be covering Rune today by request. I didn't have time to write something up today. I was pretty busy with big paperwork. But I am going to do Rune USDT by request from one of the members in the general chat in our Discord. Of course, just before we begin, make sure to join the Discord if you have not already. And if you guys have any questions, links to anything you could possibly need, down in the description below. Let's get it, guys. Okay, here we are. And we're going to start off today with CoinGecko. And again, just overall, a relatively down day in the markets. We see that Bitcoin is about 5.1% over the last 24 hours. That's not really the case. So CoinGecko kind of calculates differently as opposed to TradingView, because I tend to look at price from candle close to candle close. And looking at TradingView, Bitcoin's only down about 2%, about 1.5% actually now as price is starting to climb, and down about 6.1% over the last 7 days. So again, we talked about this BPR, break, pullback, retest. This is a very common trading pattern when we come across areas of support or resistance, and there's two potential types of trades that you can take based upon a BPR. Other people call them other things, but I like break, pullback, retest. And that is where you break a level of resistance, for example. You then, and this is where a lot of people will enter, right? That you'll hear the term momentum. I use this term a lot, momentum trade, thrown around a lot. And often momentum trade is just kind of a cover up for somebody who was wrong on the wrong side of the trade. And they're like, oh, I was long, my stop loss got hit, but now I'm momentum trade, whatever. But that is a momentum entered position. You see that price is breaking above resistance. Breakout trade is also fine as well. It's another term for it. But often what we'll see, particularly when we're in a significant period of consolidation, we typically won't actually have the rally on the first or sometimes even the second breakout. We'll break, we'll pull back, we'll retest a level of support, ideally establishing a higher low if you're a Bula, and then we'll continue. And then maybe on the second break of that same resistance level, that's more the time to get excited. But generally in these areas, and we'll talk about this when we get to the chart, which, why don't we just get to the chart? Makes things a little bit easier. Okay. Let's just start off, as I always like to do when I am looking at any chart. I like to figure out what market regime we're in. Are we in markup, markdown, or consolidation? And consolidation can either be accumulation or distribution. It can also be reaccumulation or redistribution. So in this particular situation, and I posted about this just a while ago in the Discord to the premium members, and I also posted, it'll actually be coming out in about 20 minutes on Twitter. So I like to write up the analysis for the premium members. Obviously, they get everything first. A little late today, and I didn't get to do as much analysis as I wanted to do, but I like to post it to them, and then several hours later, I will post sections of that to Twitter for free, so individuals can see basically what we do in the PTG. So, anyways, looking at Bitcoin's chart here, we can see that just over the last let's say month and a half. We're not in a clear markup phase. Of course, we're not uptrending. We're not making higher highs, not making higher lows. And we're not really in a markdown phase anymore, right? You could argue that we're in a macro markdown phase, okay? But if you made that argument, then, we could argue that we're in a macro markup phase, right? It just depends on where you want to zoom and where you want to take your slice of reality at, okay? So anyways, I like to focus on the here and now. So we can see that we're not in either markdown or markup. we're in consolidation. All right. Consolidation is characterized by relatively equal highs, relatively equal lows, and generally ranging price action, sometimes trading in a channel, sometimes kind of all over the place. But in general, we have a consolidation pattern right here. Typically in a consolidation pattern, you want to be activating your mean reversion strategies. Often lower time frame strategies will do very well here. Momentum oscillators will do very well here, not on the higher time frames, and we'll talk about this in a second. So on the daily time frames, things like the RSI are going to get you in a lot of trouble. Unless you're able to utilize the RSI for maybe like a real bottom, and then you're able to buy at the bottom of the range. And we did something very similar. One of the recent signals, not recent signals, but signal that was put out several weeks ago was to buy BTC at 19K in oversold conditions, and we've continued to hold that position and do continue to hold that position. So if you're able to use the daily RSI to catch the bottom of a markdown phase, then that's fine, or any momentum oscillator of your choice. But in a range like this, if you're on the daily time frame and you're looking for overbought or oversold zones, or if you're looking for the RSI or other momentum oscillator to confirm a trend, you're going to be in some trouble, because the only time it's really going to start signaling for a trend is going to be on those breakout trades. Most of your long signals are going to start firing. And you run into that same problem with the BPR, where often we will not break out after a significant period of markdown. If we go into an accumulation phase, it's often not the first breakout that we actually get substance on. So you just get whipsawed right back down to the middle of the range. And that's why I think a mean reversion strategy here works really well. You can, this is a fantastic opportunity if you guys haven't done anything like this to check out something like an RSI bot on 3 commas. We're actually going to be publishing our mean reversion automated strategy so far. And we'll be talking about our automated strategies here in a little bit, because they have been performing very nicely over the last 2 years. So, but yeah, a meso time frame, or even a micro time frame, maybe a 30-minute. I wouldn't really go any lower than that. 15-minute maybe, but you get down to the 5 and the 1 minute and the 15-minute. Often I find that people just get in trouble. That's not really an area where most traders are consistently successful for the long run. I would say that's an area where bots can be relatively successsul. So, you boot up the 30-minute chart, you boot up the 4-hour chart, maybe the 1-hour chart, and you're just looking to play mean reversion. So if price goes oversold, you're going to buy it and take it back to the mean, or your moving average. A 50-period moving average works very well for this as kind of the average of price. If price gets overbought, you're going to short it back down, and you're going to be successful just about every single time until the trend actually bends. The trend is your friend until it bends. And then price breaks out or breaks down. At that point, you're going to take the loss on your mean reversion. Hopefully you've had quite a few winners up to that point. And then you're going to switch back to your daily time frame strategy. Be like, oh, we actually have a real breakout here, or a real breakdown. And we're going to start taking our regular position. So this is the type of trade that you would learn to take if you take our PTP course, or a Pathways to Profit trading strategies that we do teach our students. So all good stuff here. Yeah, so that's mostly how I've been keeping myself busy in this range, mean reversion strategies, and we talked about this. So yesterday we talked about market structure. Right now we are on the daily time frame. So where is price sitting at right now? It's at the daily point of control, and we talked about this yesterday. I would have liked to see a little bit more bullishness, but again, we prepared for this. We talked about this yesterday. If price were to lose the daily point of control, and again, not the order block, but we talked about the daily point of control. If price were to lose the daily point of control, then we would be looking at a couple lower entries for limit bids on our longs. Or if you were able to get into a momentum short, those would be your take profits. This is exactly what I posted about. And this will all make sense more in the 30-minute chart. But for now, I just want to point out that we are right now testing that daily point of control. That's where we're currently consolidating at. And overall, this doesn't scare me. If we look at the daily RSI, again, very indecisive. We've gone from bullish control zone being above the 50 mark, back down below the relative strength index moving average. So again, the RSI is not going to be giving very good signals here on the daily time frame. It's just not going to be super helpful. It's not going to be super efficient, and it's just not what we're. Yeah, okay. Until you get to that signal that does indicate a breakout and a rally of the trend, and that's where you want to switch your cadence and switch your tempo. So most interesting to point out here. So while momentum oscillators are not extremely useful in consolidation ranges on the higher timeframes, very useful in the lower timeframes, volume is very important. And so as we can see here, and I actually just want to take this volume off the chart so it's not confusing. What I have down here below is nominal value, nominal volume. So this is volume in terms of USD. So TradingView, and I talked about this yesterday, TradingView calculates volume in terms of the asset traded or the base currency. So in this case, we are looking at the Bitcoin USDT chart. Bitcoin is the base pair. Tether is the quote pair. And we would like, ideally, volume to be quoted to us in terms of the quote pair. We want to know how many dollars actually changed hands, how many dollars worth of Bitcoin, not how many Bitcoin. We don't really care about that because our brains are hardwired to easily conceive of quantities of money. But when you're talking about quantities of Bitcoin, it's, unless you're talking about like, oh, I'd love to have 1 Bitcoin one day or 100 Bitcoin one day. Well, then, yeah, those are round numbers using the metric system. But when it comes down to a number that you understand on a visceral level, it's going to be a dollar value. So I like to look at volume computed in terms of dollars. And so there's a very handy indicator here on TradingView for that, volume USD. And this just easily tells us the dollar value of crypto being transacted. And here we can see that volume in USD terms has absolutely exploded. We're having a lot of volume come in, particularly over the last 2 weeks. And I really like to see that. You do want to see a lot of volume. You want to see a lot of money trading hands when we're in an accumulation period, when we're moving sideways, because that is going to be more strength, more confluence to the idea that we are accumulating for a potential run to the upside. Or the other thing that this could be, and again, I keep my mind open. As a trader, you have to be dynamic and nimble and willing to change your mind. We could potentially be in a redistribution zone. The argument for that and the philosophy behind that is obviously there's a lot of macroeconomic headwinds that are spinning right now. There's a lot of contagion coming out of the Chinese economy right now. For example, recently, there was about 200 Chinese citizens that were protesting in front of the local, I believe it was the People's Bank of China branch in the Hunan district, the capital of Hunan. And the Chinese government sent in thugs to assault them while police looked on. And the reason why these people were protesting is because their local bank in the Hunan district, in the Hunan province, basically ran out of money, right? So we are seeing the same thing. I just want to make this very clear. What we're seeing coming out of China right now, and my friend Ansel Linder over at Bitcoiner, he just, and FedWatch, they just put out a cool clip about this. So if you search YouTube for FedWatch, you should find it. He was talking about this. What we're seeing coming out of banks right now, provincial banks, but eventually the contagion will creep to larger banks. What we're seeing in China right now is exactly what we saw with Three Arrows Capital, Zhu Su and Peter Davies, where you have, just this fund of money that people have entrusted, right? And you just have poor risk management, loose credit, taking big bets, and they get wiped out. They get liquidated, and then they don't have the money to pay their depositors. The depositors want their money back. And even though under Chinese law, all of these citizens were entitled to, I think it's like 500,000 yuan. And instead of that, the Chinese government trying to suppress the information about the contagion creeping out of their economy. Again, this all started kicking off with the Evergrande crisis, but it's a credit bubble. Like, it is what it is. Like, shit falls downhill. It's a credit bubble. We've known about this for quite a while, the bubble of everything. And crypto, as with startup culture back in the tech boom and bust of 1999, 2001, startups at that point in time, if you go look at the tech boom and bust, you'll see that startups were the massive recipients of large amounts of capital, just money thrown at them, venture capital money thrown at them. And when the bust happened, they were the first to go. And if you look at the 2008 financial crisis as well, you'll see that startups got hammered first. They were the earliest. They were the canary in the coal mine. They got hit hard. They dropped really hard. And from 2008, it wasn't really until 2011, 2012 that actually the actual market participants in the housing market started to feel the effect of the 2008 financial crisis. It took several years before that contagion to actually seep into the housing market, whereas it hit startups right away. The interesting thing about that is that startups, even before the housing market started to feel the pain of the 2008 financial crisis, the startup culture and startup economy started to rebound, and they rebounded first, they rebounded fast, and they continued to outperform while the housing market still suffered under the duress of the financial contagion for years to come. I mean, quite like 5, 6, 7 years, the housing market suffered until it was like 2015, 2016. So there are a lot of economic headwinds brewing, and I do want people to keep that in mind. All right, like I'm a Bitcoin bula, long-term investor in Bitcoin, long-term believer in crypto. But we exist in the economy that we're in. I'm not gonna, and it's not really I've seen things go so many different ways that you would expect. Like right now, you could kind of flip a coin like, okay, well, I know Warren Buffett said to buy when there's blood in the streets and, be greedy when others are fearful. So I should be really bullish here. The problem with that is that you catch a falling knife, right? Like you can have the right idea, but you can just be 6 months early. And it takes a lot of conviction. I'm talking Michael Burry conviction to hold that position. Plus, Michael Burry was also a genius and he understood liquidation prices and stop losses and capital. And he had all that allocated as well as a firm lock that his investors couldn't take their money out. But when it comes to you, the individual, you do want to be careful not to catch a falling knife. So I'll lay all that out. Now, I still maintain my position on Bitcoin price action right here, but that is it seems to be the global macroeconomic situation that we're in. Now, having said that, again, remember what I said about startup culture. Startup culture felt the pain of financial contagion first. They felt it fast. They felt it hard, but they recovered extremely quickly. And I think crypto, and I've seen it, but crypto, it was exactly the same thing from the COVID crash, right? Crypto crashed. The regular equity markets crashed, but crypto recovered first, recovered fastest, and went on to soar to new highs. Okay? So very similar here. It could be that the financial contagion is nowhere near over, but that doesn't necessarily mean that crypto will continue to go down in gridlock with not gridlock, but move in parallel, move in tandem with the regular equity markets. Crypto will recover quickest. Crypto will recover earlier than equities. Crypto will recover before stocks. It's just the way that it is. Venture capital is going to be more interested in moving money back into the stocks. Why? Because moving more money into crypto before they move money into stocks, because crypto has a higher risk reward potential, right? Stocks go up 50, 80%, maybe 300% if you catch your penny stock. Cryptos go up 1,000%, 1,500%, right? 30,000%. So just keep that in mind. I don't want you guys to get your minds too polluted with the idea of financial contagion. Of course, we could see another more downturn. We could see Bitcoin down at 15K. It's absolutely possible. These things can happen, but I don't think they're going to happen now. I don't see any technical indications that that's going to happen right now. In fact, I see more technical indications that we're going to rally from here. And that's why I hold my position. So keep all that in mind. Even though financial contagion is not over by any means, it booms and busts. It booms and busts. And as it booms or busts, it's like a rolling wave, right? It hits certain sectors and then it moves on to other sectors, right? And after the catastrophe, after the calamity has passed and it's moved on downhill, you begin to rebuild. You don't just sit there and you're like, oh, my house just got blown down by a hurricane. What do? You rebuild. The hurricane's gone. Okay. It's over there fucking with other people. That's what you do. So, and again, there's also I guess a common theory, one that I'm kind of holding, that, with the risk of stagflation, which for those of you who don't know is when we have inflation, runaway inflation, let's say, but we don't have runaway inflation right now. It's just quite high and shitty, mixed with an economic downturn, a recession. This is a stagflation, right? Where we have a stagnant economy and we also have inflation. And this is generally considered the worst possible thing that can happen in economics. To combat the stagflation, right? To ward that off, the Fed might have to back away from its desire to appear tough and extremely hawkish closer to the end of 2022, maybe Q1 2023, and open the money spigots back up. And I'm just telling you right now, if quantitative easing is resumed, which I'm not a fan of, but if quantitative easing is resumed, and if the balance sheets of central banks begin to tick back up, and actually, I want to look at those charts here in a second. I posted a very big thread on Twitter analyzing the central bank balance sheets with Bitcoin's price action and with the SPY's price action. And the correlation is crystal clear. When the balance sheets of central banks are increasing, when central banks are taking on assets and creating more debt, risk on assets rise, period. And when central banks begin decreasing their asset sheets, risk on assets fall. It's relatively simple. So, all right, we'll take a quick break because I do see quite a bit of comments in the chat. So we'll just take a quick break, look at some comments in the chat, answer any questions, and then we will move on to the lower timeframes here on BTC and look at a few other charts. We'll start off with a rune after that. Shout outs to Chris Hinshaw, Peter Couchman, who was first in the door. We've got Jonah Loves the Snow watching us over there on Twitch. Ben Kirkland, good to see you as well, my brother. Challenged Investor over on Twitch. Caprica, good to see you. Haven't seen you in a while. He says, how about silver? I just talked about silver yesterday, so it was Money Monday yesterday, and I did make my Money Monday allocation into gold yesterday. Bought gold bullion through JM Bullion, and B-Flow 2 in a row. Are you feeling okay? Let's go, says Crypto Rich. Gravy, Grits, and Green. What's going on, my friend? Good to see you, man. Mr. H. We've got Ron Legato, Mr. Ether, Robert Warner as well. Crypto Cat throwing the dabs out there. We've got Challenged Investor says, guess who's buying the 10-year treasuries to suppress rates and force dollars to risk assets? The Fed of balance sheet. The Fed of balance sheet. Guess who's buying the 10-year treasuries to suppress rates and force dollars to risk assets? Fed of balance. Oh, the Fed off balance sheets. Oh, I see. Okay. Yeah. Okay. And that's what, listen, a lot of people are watching the bond markets right now because, again, people are, one common thread out there is that bond prices are rising. Bond prices are rising because investors are seeking a safe haven. And if they're seeking a safe haven, then that means the risk on assets are continue to suffer. And I think that is likely true for stocks. And listen, again, crypto recovers faster, crypto recovers earlier. Yes, lockstep was the word I was looking for. Alexander Pearson in the house. We've got Electric, Chris Hinshaw, Killer Craig. Good to see you as well. Saintsy, Verk, and boom, bam. I am glad to be streaming as well. I love my job. Okay, so any users. Okay, so after we've said hello to everybody, let's zoom on down here. And I think probably the most important thing that I can point out, remember how I said earlier that your momentum oscillators are not going to be very helpful in a consolidation period on the higher time frames. But if you get low enough, in this case, the meso time frame, the 4 hour, you can get some pretty good signals. So I just want to point out how well the RSI has done here at picking out the tops and bottoms for Bitcoin's price action throughout this consolidation period. Again, RSI gets oversold. It's the bottom, right? We've even got, no divergence there. But again, RSI gets oversold, recovers. Again, great opportunity right there, just from potential signal up. You got a 17% trade. RSI gets overbought right here. And guess what? Price immediately turns back around. Got a 12% trade right there. RSI gets oversold again. You hop back in. Boom, 24%, baby. RSI gets oversold here. We have a little bit of bearish divergence here on this next up thrust and down to the races. And where is RSI at right now? Oh, is that oversold? I see. Oh, what should we do? What should we do, fam? What should we do? Let's go to the 30-minute chart, one of my favorite charts to talk about. Okay, so yesterday we talked about this order block right here. All right, and this order block originates. Boom, 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 boom. Really, it originates right here and kind of spans this resistance level right here. So you've got price in a markdown. We've got a little bit of consolidation, price trying to bounce around and find direction, but then we see that the sellers do really step in here at around 21.3, suppress price. It goes for a tap right here, goes for another tap right here. Price is unable to break out, and then we fall down into this lower range. And price creeps up to test that order block, 21.6, 21.3, shoved back down. Price creeps up, consolidates, gonna let scam wick down. And then we have this nice bowl-shaped accumulation and consolidation period. Nice up thrust. We're unable to maintain ourselves. We do have some consolidation right here as the sellers step in and distribute all over the faces of the bulls. All over their faces. And again, we have a nice down thrust. Again, breakdown from that order block. Price comes up to the order block, breaks above, breaks, pulls back, retests, off. There we go. Oh my God, here we go. No, sorry. So what we were looking for yesterday was the kind of this kind of, we can see the same thing. Look at this nice bowl-shaped distribution as opposed to this nice bowl-shaped accumulation. So I do like this. It's possible, again, so if we do see sideways price action here and we don't see a rally over the next month or two, and we just see like price suppression, price goes sideways, or price resumes the markdown phase, then what it means is that this accumulation period was canceled out by this distribution period, and there wasn't really anything longer term planned from the market makers or from the larger pocketed investors. We just had accumulation, and then we sold it to noobs right up here at the top, and this distributed all over them. So We were talking about yesterday the order block as price came down. Of course, it would have been great for the Boolahs if we would have held the order block right here. A little bit of consolidation, but then we chunked right back down through it. Down here now at the daily point of control, which is where I would like to see price hold. That would be quite good. If we do see price hold here, then we're going to see these price targets hit relatively quickly, definitely within the next week, probably in the next few days. But we had these naked points of control, these NPOCs right here, and we've actually come down and tested the first one at 20.6. We have this other one down here at 19.7, 19.8. So I talked about this yesterday. If you were, and it would have been hard, this is a 30-minute candle and we chunked down real hard, but if you did somehow take a short here, if you did, then I would be looking to book partial profits right here in this zone. I would move your stop loss to break even. And then if we do end up losing 20.6, and we do chunk down here to 19.7, then this is where I would be closing your short position. And what I would be doing simultaneously is I would also be moving your whatever, if you're on Bybit, this is super easy to do. You just move to hedge mode so you can be long and short at the same time. I would be stacking up long positions here too. I'd be closing shorts right here for about 50% of the nominal value of the short, moving the stop loss to break even, setting the further take profit down here around the 19.7, 19.8 range. And then I would be building a long position between 19.7 and 20.8, 20.6 from here to here, right? From here to here. That's what I would be doing. Now, there are other ways to take this trade. I think that's the best way to possibly take this trade right now. And in fact, I'd like to see a kickoff right here. Two things I'm going to be watching. Remember how we said the 4-hour RSI was oversold? So if the 4-hour RSI is oversold, and we're going to see immediate bullish price action over the next, let's say, I don't know, 8 to 12 hours, which I think is likely, then what we could do is we could move up here back to the order block and reject. Okay. Now there's two types of rejections. I would like to see, it doesn't really matter if price moves down suddenly or if we consolidate right here. If price remains right around here and goes sideways and then we break down, I would be momentum shorting at that point in time because we had a nice 4-hour RSI oversold signal. We took the bounce, price consolidated, is unable to break the order block and push back into bullish control zone. And then I'll be taking the momentum short down. I'll be targeting here and here, and then I'll be rebuilding my long position is what I'll be doing. If, on the other hand, we move up here, we consolidate, and then we break to the upside, I would add to my long position. And again, targets. And you can also just wait for that. You can just wait. You can enter now and look to take profit here, or wait to see which way the market moves before, if we break down, close your long position or break even, get into the momentum short or book a little bit of profit, or break to the upside, add to your long position. So a lot of conservative ways to do this, and conservative trading is what you want to be doing in these times of market uncertainty when things are not just ravenously bullish. And you don't want to be using a lot of high leverage, guys. Again, I know it's not sexy, it's not fun, especially if you got a small account. If you've got a $1,000 account, a $5,000 account, a $10,000 account, it's not fun to not be using leverage, to not be taking these large positions. But just the reality is, my experience has shown me that traders over and over again cannot manage their risk in periods of consolidation, especially with large position sizes. You're just going to get wiped out. And the goal here is to survive at all costs. Shout out to Crypto Kaleo. Let's see here. Alexander Pearson says, take note that you can make more APR off of treasuries than you can from doing stable coin pools on Curve. But who wants to hold that shit coin? USD, I mean. Watch for a recession. Oof, lowering wages. Good luck with the Dems in office. Yeah, I could definitely see that, challenged investor. Yeah. So definitely, again, I think you're agreeing that in the medium term, from here till maybe the end of the year, maybe even a little bit longer, definitely more pain in store. And I mean, for everybody, at the pump, at the grocery store, at the brothel, you know what I mean? Those prices are outrageous right now. So, yeah. I want to give a thank you to Bridge Investor and Wizen9 for the follows over there on Twitch. Highly appreciate it, guys. Thank you so much. Okay. So as we move into the evening here, as we get a little bit closer to candle close, price just consolidating above the naked point of control that we've now tested at 20.6. And we're currently looking at lower time frame resistance at about $21,074. We'd like to see price again get over that and march toward that 21,650 for the bullish case. And again, another accumulation area right here, 19.8 to the long side, to the downside. The long side to the downside. The long side to the downside. All right. Let's see here. Okay, so now that we've looked at all that, let's just go over here. Crypto market cap, or excuse me, CoinGecko. Load up. Anything massively interesting? I will say. So the only thing that's super interesting here, if I look at the 7-day, what's up? We see that Phantom has moved down to like the number 8 level here. And again, we've got a lot of stable coins that are moving up in value. SNX, BitDAO, NEM, Ethereum Classic, all of those have dropped significantly, giving back a lot of the gains that they put in over the last week. But Celsius Network, I know. Yes, I know, guys. Celsius Network, let's take a look here. Celsius Network doing some things. So we might let's take a look at Rune first by request, and then we'll look at Celsius. So Rune USDT on Binanceco. Start off as we like to do on the weekly time frame. Okay, so Rune here does appear to be in a markdown phase. Okay, on the higher time frame here on the weekly, here we have a nice markup phase. Here we have a nice big huge distribution phase. And now the beginning of the markdown phase. So lower lows and lower highs. We've had lower highs here, here, and here. So you could argue that this is the beginning of the markdown phase and the end of the market phase. Oh, excuse me. As they go through the bankruptcy proceedings, yeah. You know, listen, we all make mistakes, Crypto Rich. Okay, so Rune USDT, again, clear markup phase, again, potential beginning of the markdown phase. You could also argue that this is wide scale distribution. If this was wide scale distribution, then we can expect significantly lower prices moving forward. I will just point out here that I just point out the volume. Okay, again, volume is just so important. It's so important when you're looking at whether, call me crypto. It's so important when you're looking for shifts in trend. So again, here, just look at this volume. Volume up here, volume up at the bottom, right? Not a big volume spike here, volume spike here, volume spike here, and volume spike here. Now, I do want to look at this in terms of USD. And yeah, we do see that all of these areas are also correlating, and actually better. Actually, so this is, let's just get rid of that volume chart. It's just so... You look at the problem with crypto is that if you look at volume in terms of the asset traded in terms of the base currency, that's totally fine if you're comparing apples to apples. So if you're dealing with like stocks, for example, or crypto asset that's within, let's say, like 15 to 20% of the original price. So like, you know, if we weren't, so right here, we're down like 93%. So to move the same amount of dollars, you know, $2,000 over here is a little blip on the volume chart because $2,000 in volume is a small number of coins. But down here, $2,000 is like is exponentially more coins, exponentially more. So that's why you see the divergence between the volume, the default volume indicator of TradingView. And this is why the volume in USD is just so helpful here. So anyways, we can see these volume spikes coming at the tops and bottoms. And again, we're starting to get a nice little volume spike right here. And in fact, increasing volume as price continues to move, which I like to see. So we've got a little baby trend line here on the weekly time frame. Let's see if we can maintain it. And I'll probably refine that as we go down to the daily. And in fact, we might even be trading in a channel, which a channel, if you can find it, is one of the greatest things to find as a trader. Predictable patterns are absolutely fantastic. So RSI is not oversold here on the weekly. We do seem to be attempting to cross the RSI moving average. And so, and we're not really at a significant level. Actually, you could argue that, yeah, look here, this is just funny. This is where liquidity began when this market opened up. And we've basically dropped right back down to that area. So this is the opening price of this market, and price basically dropped right there. So RSI isn't oversold. I don't see any bullish divergence. We've been in a downtrend for a while, and price is moving up. And the only positive thing I see is this volume spike and increasing volume coming in. So that's really the only good thing that I see about Rune. Let's go into the daily and see if we can refine that trend line anymore. And yes, I do believe we can. And in fact, so I like to use the new market structure. So we'll be doing it like this. And we'll be doing it like this. Actually, like this. There we go. Cool. So we've got a nice channel. And don't worry that it's broadening it and broadening. It's just, that's how you draw the fucking trend line. That's all nonsense, dude. Yeah, so here we can see a little bit more granularly, price moving down, kind of a reduction in volume here, and now volume picking up as we're beginning to form this ascending channel. And this is a nice little trick I like to use with the old fib tools. Let's see if it works here. Okay, not bad. Yeah, not bad. And so if this one, okay. So not corresponding to my channel the way that I would like. The channel is actually relatively tight, but this would, this Fibonacci structure strategy would be suggesting that buying at 23.19 and looking to sell at 36.19 is the way this strategy works. Otherwise, so that's on the table. We're at the daily point of control right now. Price has fallen down to the daily point of control. And if Bitcoin does show an uptick here, we're likely going to see altcoins move up as well. But I'll tell you what, you don't have to look at Bitcoin anymore to let you know which way altcoins are going to move. You can just look at Ethereum, right? If Ethereum moves up, altcoins move up. If Ethereum moves down, altcoins go down. And it's a little bit better correlation than Bitcoin. This is just something that I figured out over the last few actually 6 months of really digging down deep into this. So I think that's the way you want to go. But anyways, other than that, we can look at this $2 and 2.046 is where I would be looking for a potential long limit bid entry into Rune, assuming that the channel holds, and then we can just simply target here. You also have an alternative setup here using the Fibonacci structure of buying now and targeting 3.701, which 3.701 is actually, I'm going to mark this out. 3.701 is actually pretty good and showing some confluence with that top of the channel here that we're forming. So I do kind of like that actually. So mark out essentially our entry here. And I'm not actually going to be entering Rune at these prices. I'd like to see it drop a little bit lower. But if we see BTC begin to move up, or excuse me, Ethereum begin to move up, then maybe we'll be a little bit late to the party with Rune. This was recommended to me, and I do like to take a look at the recommendations that people give me because, again, I'm not the smartest person in the world, and just having a community and having a team with you to recommend things to you, see things that you don't see, can really help you make money. So we're going to put Rune on the watch list, actually. So let's add Rune to the watch list here. And so we'll just be watching. We'll be watching to see if we do get a bounce from here around the $2.30 mark up to 37.01 or 3.701. And we'll also be looking if we fail here to see if we can get caught at about $2, 2.034, where I'd be looking at there. So yeah, so I think that's good. I will go ahead and I'm gonna post this in the Discord. So I'm going to put an entry line there as well. And then we'll do some call outs. Ba-ba-dum-bum. Prompy. Okay, I like it. The runes on the watch list. All right, so now we'll just go over the coins that we've been watching right now. Ethereum Classic is first on our watch list. Getting here to the daily again. This is what I like about Ethereum Classic USDT. Ethereum Classic right now is trading in a channel, and it occurred to me. So I've altered this chart a little bit because I didn't like the way that I had my trend line drawn, and now that I've moved my trend line to be more correct and in line. See, here's what I'm talking about. I had previously had the trend line drawn like this, but I think it's more appropriate to draw it like this. Okay. And that being the case, that moves us significantly closer to that entry level, or excuse me, that makes us much closer to the top of the channel than 3602. And so I began looking at this earlier, actually right before the stream, and wondering if, again, trend lines are less important than market structure and volume. Okay, remember that. Trend lines are sus. Okay, they're just there as an easy reference for logical places the price will go. But you need to watch for how price reacts when we get to those areas. So here again, daily RSI got overbought. We had a big bump in volume, and where else do we get big bumps in volume? Pretty much at market tops recently on Ethereum Classic. So. Here, and again, I want to zoom in here to this area right here. Look at the market structure right here, this distribution, like price spikes up and then goes sideways for a while. We've got a lot of wicks. And what do we got right now? Price spikes up, moves sideways for a while. We got a lot of wicks. I feel like I might be being foolish by wanting higher prices before shorting Ethereum Classic into the ground. I'm starting to feel like this might be the area to enter, but I'm going to be patient here. Again, RSI is not directly overbought right now, and I'm not sure. I just don't like I don't like my lack of confidence about the whole situation. I do want to be in this trade. I do want to short Ethereum Classic, but I am going to be patient here, and I'll just wait, because if we do have a nice big breakdown from here, just like this, there's going to be all the time in the world to enter. I mean, we're going to have forever to enter, because remember our target. Here's the trade. Here's the original trade setup. Let's zoom out. Here's the original trade setup from 3602 back down to $9. I mean, we're looking at a 73% trade to the downside. I mean, this is the trade that's going to pay for 2022, guys. This is the inflation buster. This is my inflation buster trade. All right, so we need to make it right. We need to get it right. So we're just going to wait. We pop up to 3602. Great. We're definitely going to short from there. And if we go sideways and then break down, we'll just short from here. So that's where I'm currently at with Ethereum Classic right now. We touched on Ape. Ape, again, I didn't really have, again, there's not a lot of TA I can do on this garbage ass coin, but the only thing that we really had here was, again, support, deviation. We have a breakdown. This reminded me, this is very reminiscent of like Bitcoin back in 2018, breaking down from 6K down to 3K, and then moving up and resuming the deviation. But we're just unable to hold the daily point of control. So we're breaking back down below the daily point of control. Likely this should probably be a short. This chart screams short at me. Again, just break down from the daily point of control. excuse me, potential test, rejection, actually getting up to that level, but unable to hold it. So, but I just don't feel like any action is warranted here. You know, I feel like there's too much downside risk of shorting right here. I'm not a super eager shorter in the market right now. It's, you know, can't just keep doing the same thing over and over again. You're gonna get punched in the face. Phantom USDT. Again, weekly time frame, we've seen a massive drawdown in Phantom. And I do really like that we've come down to a very important area, the lows that were established, this pivot that was established prior to price making its new all-time high. And we've dropped all the way back down, like 90-some%. And here we are in Phantom. So I would love to see, I want to see this level hold. I want to see about 24 cents, not 0.24 hold. And then I'll be targeting 44 cents, 53 and 69. All right, but I need this to hold. If we break down this level, I mean, get your parachutes on, guys. Get your parachutes on, because that's going to be a suicide death row right there. Synthetics, again, very similar to a Phantom right here. We've got this, and there is more history on KuCoin, for example. KuCoin's had synthetics longer than Binance, but the Binance chart is just fine here, has more volume anyways. So again, we've got this double bottom kind of establishing price, and price is pulled all the way back down. I love this big wick. I love this explosion of volume. I'm not super crazy about the volume coming in, not a lot. And again, we're seeing synthetics just move right along with the market. There's been a lot of interest in synthetics right now, particularly because I'm an investor in Velodrome, and Velodrome's been paying out a lot of synthetics bribes lately. So, and synthetics actually been... There was actually quite a bit of fear there for a while when the whole 3 arrow, like a month or so ago, when the contagion in DeFi was fresh and Celsius was collapsing and 3 Arrows Capital and Zusu just went on the run and everything. But there was talk back then of synthetics. And when Lido staked Ether was, everybody was worried about Lido staked Ether, which they should still be worried. That contagion's, again, not over in the DeFi sector, but the risks are known, and I think appropriate hedges have been taken for the most part. Synthetics was talked about as being insolvent, and I think that's been proven to not be the case whatsoever. So synthetics has been showing a little bit of strength lately, but so synthetics was one of the top 10 performers over the last 7 days. But we are giving most of that back now, down 15% on the current weekly candle. We would like to see this current weekly point of control hold at about 2.655, and then upside targets of 3.915, $4.59, $5.29. Again, if we can hold this level, put in some nice accumulation. Again, you can see I'm being very conservative here and just targeting the top. But I really do like this big grab for liquidity wick. Got some big buyers in here, and I'd like to see this level hold. BitDAO, again, very similar to Phantom. Market lows. I'd like to see price pull back, hold these lows, and then I'll be looking for higher prices. EOS, the little pre-sale that couldn't. I've never talked to an EOS investor that was happy with their EOS investment. Never, ever in my life. I've talked to so many Bitcoin investors that are just happy with their Bitcoin, even when this is crazy. I've talked to Bitcoin investors that haven't actually made money, but they're so happy they're in Bitcoin. Okay? You will never meet anybody else. You won't meet Ethereum investors. If any other cryptocurrency, if it's not Bitcoin, any other cryptocurrency, if you talk to an investor, if you talk to them and they're up, then they're happy. Crypto's great. It's the future. If they're down, crypto's fucking bullshit. It's just how it works. But Bitcoiners, price goes up, price goes down 90%, up 1,000%. Just happy as pigs and shit, man. Happy as pigs. So EOS USDT, the little pre-sell that couldn't. Weekly RSI just reached oversold levels, had a nice little bounce up, very similar to the rest of the assets that I just talked about. I'd like to see price pull back, hold support, and then we can be looking for higher prices. So again, similar to Rune here. Okay, that's pretty much that's the altcoins. That's the altcoins, guys. Crypto Caveman, good to see you, old friend. Yeah, no, I believe that, challenged investor. Yeah, the precious metal derivative markets are sketchy. Alexander Pearson draws most of his trend lines that allow a fake breakout of about halfway down the trend line. And he says you almost always get these fake outs. So when I draw my trend lines, I just take into account that drawing a trend line that makes sense over respecting every single wicker. Yeah, exactly. Best fit. When you're doing trend lines, just understand that you're doing best fit. They're there for their a frame of reference, and price action is what's more important in those areas. Alessandro says this channel deserves more views. Somebody high five this man. Let's see if I can get the. Ooh, hold on. So I've got to change this to. There we go. Cool. Yeah, so now that'll work. So now we can do things like this. Very nice. Thank you, Valk Mike. I really appreciate that, man. Break 17 says, I just short whenever I see a few green candles. We've got this one. And we also have this one. Hey. I can get the foghorn. It's not a problem. I find, like, you know what? I literally have had this thing for like 2 years, and I never set it up, this Stream Deck, and then I set it up a couple months ago when I was making the pre-recorded videos, and I love it. I love it. Like, not only do I use it for the streaming, but I use it in my day-to-day life now. There's this one button on here that will switch my audio setup from my headset to my speakers. I don't have to like click the little icon and actually manually switch. I just click the button and love it, man. What's the sound clip for a Do Kwon rug pull? That's the one. That's the one. Y'all got Do Kwon. Let's see here, man. Peckham08, good to see you, my brother. Yeah, I really do like this this time of the evening. You know, it allows me to do all my analysis and charting and trading in the morning, and then I've got everything to talk about, give you guys opinions, give you guys ideas, and I'm just not kind of fresh in the morning. I don't know. I haven't even looked at the charts yet. I just feel like, again, I never run out of things to say when I've already done all my work for the day. When I'm actively looking for things to say, because you guys are seeing me do my morning analysis, there can be some odd spots. You know what I mean? So. Okay, it's about 4:12, so it's time to end the stream, guys. So I like this. I think I can be more consistent. I think I can be here just about every day with these later afternoon streams. Again, it's just perfect. I can end the stream, and then I can go get my daughter and have time to relax. So anyways, so let's head to the big chart, and we'll say goodbye. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. I think we might change it to the Breaking Bitcoin and Crypto Market Update. Get some more of those more keywords. Let me know what you guys think down in the chat. I'm actively looking for somebody to make thumbnails for the daily stream. So if you are a graphic designer or know somebody who's pretty good at whipping up some Photoshop thumbnails, feel free to DM me on the Discord or drop a comment on today's video. I'll be happy to talk and see what works. Big shout outs to Flimp. So Flimp is a graduated member of the Cracking Cryptocurrency Online Trading Academy and the Premium Trading Group. He's a great dude. He's been in the community for a long time, and he's graduated. He's doing well trading, and we have created a channel for him in our Discord. So you will be able to see him post his analysis, post his trades, post his ideas about the market. So you guys can definitely go make sure to give him a follow, give him some ovations over there on in the general chat, and cheer him along. Make sure you throw some reactions on his trade ideas and setups, and just let him know that whether you're right or wrong, we appreciate the hard work and we appreciate the effort. And it takes a lot of work. It takes a lot of work to be a consistent, profitable trader. So huge shout out, huge hat to him. And if you guys enjoy the content, as always, make sure to subscribe to this channel so you never miss an episode. And drop a like on today's video. Give us a follow if you're watching on Twitch, DLive, or Twitter. Always highly appreciated. And it's nice. It's warm. It's inviting. Links down in the description for everything you might need. Obligatory mentions. obligatory mentions. If you guys are interested in pursuing a career in trading or just being more serious about it as your side hustle, I highly recommend checking out the premium trading group, getting access to all of our premium indicators, as well as our risk management material, all of our online trading academy courses, and access to our premium Discord group and all of my trade signals and portfolio updates. All right. With that being said, I will be back tomorrow, hopefully at the same time. There might be one potential thing tomorrow that prevents me from streaming, but if that is the case, I will give you guys an early, timely update on that, and I will see you guys on the next one. Trade safely. Cheers.